Welcome back everyone to the Audacious Money Witch channel where we talk about investing and trading stocks, bonds, and crypto assets around the world. Oh my goodness guys, you would not believe what Stanley Druckenmiller just said. Last video, I told you about why I'm so bullish on where Bitcoin prices are going, and I speak about based on the bond market action. I can tell inflation story is not over. Well, I guess I was right to think that way because in this video, I will share what Stanley Druckenmiller just warned us about in the macroeconomic landscape. Why the Federal Reserve has made a major mistake and why we are still in the risk of a hard landing market nightmare situation if the Fed is wrong. In the meantime, I will share my plan to make banks in this extreme greed market. We need to take advantage of this bull market time frame before greed turns into fear like a snap of a finger. Let me just jump right into it. If you don't know who Stanley Druckenmiller is, just know he is an investing legend. CEO of Desquin Family Office, a billionaire. He is widely regarded as one of the most successful investors in history. One of Druckenmiller's core beliefs is in making large concentrated bets on high conviction ideas rather than diversifying across numerous holdings.
I have the polar opposite investment philosophy. Put all your eggs in one basket and watch the basket carefully.
He argues that this approach reduces overall risk because it demands greater attention and analysis on fewer positions. Druckenmiller employs a top-down investment strategy focusing on macroeconomic trends to identify sectors and securities that are likely to outperform the market. This method allows him to quickly adapt to changing market conditions and capitalize on emerging opportunities. This is why I'm making this video. I think this video is way overdue because if we don't see the big picture, if we just think stocks only go up or buy risky stocks when the market is making all-time highs, then we will get smoked out like a salmon by the Fed. Okay, enough with the fish joke. Let me get back to Druckenmiller. He sold Nvidia stock fully, by the way. He thinks he made a mistake selling it at $950.
I think Nvidia is a wonderful company, and were the price to come down, we get involved again. But right now, I'm licking my wounds from a bad sale there.
But keep in mind, he bought it at $140 pre-split. So this shows he is just being modest. That kind of return is absolutely wonderful, but that's not even what this video is about.
How's it going, guys? Hope you guys are doing well. I will start explaining what Druckenmiller just said and what buy-sell action he took. In 2021, he had written an opinion paper in the Wall Street Journal that said the Fed is playing with fire. And a couple weeks ago, Druckenmiller wrote to Bloomberg and he said that he hoped that the Fed is not making the same mistake that they have made in 2021, the mistake of being trapped by forward guidance. Also, the Fed was buying $120 billion a month of long-duration bonds and mortgage-backed securities at first. Then they might have gotten down to $95 billion a month. By that time period, the rates were still at zero. That was called quantitative easing, or QE. Druckenmiller thought the Fed had a clean slate. They would have never been buying bonds to that degree with what was going on in the economy. But they were trapped, in his opinion, by forward guidance. It's pretty incredible from the point that Druckenmiller wrote that article when it was so obvious that he even wrote about it. It was 13 months from when the inflation went through 2% target to when the Fed finally had decided to raising interest rates. The Fed also bought $2 trillion of bond during that period. If you're new to the market and you didn't remember or you didn't know what happened in 2021 in the financial market, what happened was, okay, I'll let Audacious to explain that, what happened.
Back then, the Fed had waited 13 months of not controlling the inflation, and they are called inflation was transitory.
In 2021, you did say that inflation was transitory. Do you regret saying that now?
I regret saying it was transitory. Transitory means a few weeks or months to most people.
So, they did not do anything. Through the target of 2%, and it goes up to 8.5%. As you can see this chart right here, the Fed was started raising the Fed funds rate from March 16th of 2022. Remember this date. And let's look at the inflation rate of March of 2022. You can see now that was 8.5%, and the inflation was still going higher after 3 months to a peak of 9.1% in June of 2022. Back then, the Fed funds rate was not even 2% yet, and the Fed were buying bonds like crazy. And then, when the Fed finally made a move, they raised 25 basis points, just one tiny inch, and their rationale is that we need to see the whites of inflation's eyes. And they were saying that inflation was transitory when inflation was already at 4 or 5%. Today, we're still quite a bit above target. Druckenmiller said somewhere between 2.5 and 3.25. In terms of the economy, the Fed has come up with this theory that monetary policy is restrictive because of real inflation rates, but Druckenmiller doesn't really go by theory. He is a market animal. He said, frankly, that markets are better predictors than professors. When Druckenmiller looks at the market landscape today, equities are at a record high. Now, gold at a record high. GDP above trend. Bank earnings and forecasts looking good. We don't see any restrictions whatsoever. He said crypto going crazy, you name it. Bitcoin may be the best performer out of gold and silver year to date, but we have been consolidating for over 7 months. And I see a huge bull flag or cup and handle on Bitcoin that will bring the next likely target to 100K. That's why I am in coin stock.
Druckenmiller said, so all of a sudden, the crowd at the Fed has said they wanted to see the whites of inflation's eye, and they wanted to be data dependent and as opposed to the forward looking. So they are now cutting 50 basis point, not a quarter point, which is what they started with, raising rates. And they're not even at the inflation target yet. This is all on the theory that monetary policy is restrictive. So Druckenmiller continues with this. The Fed has laid out and committed themselves through forward guidance once again. However, he's saying that the Fed is cutting that 50 basis point. That was an absolute mistake. And there's risk of an inflationary spike in the same way we saw in the 1970s today. In the 1970s, inflation came down from a remarkably similar level.
Listen, does this mean that you thought 50 basis points was an absolute mistake? And do you think that there is a risk of an inflationary spike in the way we saw in the 1970s?
Yeah, I think 21 peaked at 9. I think it was 8 back in the 70s. They came down to 3. The Fed was easing because they had the 75 recession. So the Fed started easing and inflation
right back up to the peak of 12%. 12%, oh my goodness. I can't even imagine that. That's when Volcker came in and he smashed it down. So Druckenmiller, he said he's not predicting it. It's going to happen exactly like 1970s inflation. But, oh, that's a huge but it's going to rhyme, I think. But I'll let Audacious explain that.
But he said when the Fed is easing into a melt-up in financial markets and we have the fiscal policy we have going forward, inflation like 1970 is certainly a risk. And he just thinks it's a mistake not to be taking that risk into account. He doesn't really understand the rush of 50 basis points. And he thinks the markets have priced in a 97% probability that we will have another cut at the next Fed meeting. That's all through Fed guidance. Druckenmiller emphasizes that it's a big risk because if in fact the Fed is wrong and inflation takes off because monetary policy is in fact not restrictive, and we have fiscal expansion going on, and the Fed will have to tighten again. He thinks it could be a nightmare for the markets and maybe even for the independence of the Fed, because you just can't make multiple mistakes on inflation like that. He thinks a bigger threat to the Fed would be major mistakes by the Fed, and he thinks the Fed is obsessed with a soft landing and fine-tuning. I think for soft landing goes, we are already landed, even though inflation is still at 2.4%. Druckenmiller thinks the Fed's real job is to avoid the kind of problems we had with the great financial crisis, which were because the Fed was too easygoing and created a housing bubble. The Fed has got to stop the fine-tuning, meaning going very easy again, and start looking at the bigger picture and committing themselves. If they stick to forward guidance and inflation starts going up again, that could lead to a hard landing.
So what action did Druckenmiller take? Well, he shorted bonds like TLT the day the Fed cut that 50 basis point because he thought it was a mistake. FYI, he still has that short position. He said, if power ends up to be wrong here and inflation just accelerate next year, the bond yield could go up a lot of basis points, like hundreds of basis points. Whereas if he's right, you might only lose 25 or 30 basis points. So the risk reward to him is being short bonds. Looking at the chart of a TLT, the day the Fed cut that 50 basis point was at September 18. We can see the TLT got smacked down after formed a double top around $100. Now it's being shorted by Druckenmiller. Being shorted means betting the TLT is going lower and 10 to 20 year bond yield is going to go higher. What does that mean? It means its oil could go higher as well. As the second wave of inflation coming back, just like Michael Burry's tweet from 2021. Thank you guys for watching until the end. As for my inflation hedge right now is Bitcoin through my CoinStart. As we will see, it will go to 100K next if the Fed cut even more. Well, I hope you guys enjoyed today's episode. Can you feel the greed in the market? Do you think the Fed has made a mistake, like Druckenmiller said? I'd love to hear your thoughts. Okay, bye.